Good morning, this is the latest market news. I'm Ulan. Asian stock markets are mostly trading higher on Wednesday, with the overnight positive close in the US and European markets and a firm trend in commodity prices lifting sentiment. Slightly easing worries about Ukraine to appear to be contributing to the firm trend in the region. In the Australian market, financial, money, consumer, discretionary and industrial stocks are mostly trading higher. The benchmark ASX 200 index is up 0.9%. The Japanese stock market opened on a firm note Wednesday, with investors indulging in some brisk buying in early trades, tracking cues from the Wall Street where the major average moved higher overnight on upbeat consumer confidence data. However, the market gave up most of its gains subsequently as the mood turned cautious amid worries about the situation in Ukraine. In the currency market, the Australian dollar rose to a 4-month high against the US dollar. In early trades, the local unit was quoting at $0.9192, up more than 0.5% from Tuesday's close. US crude oil snapped a 2-day gain to end lower on Tuesday, ahead of the weekly official inventory data, with the investors apprehensive over demand growth prospects for oil after some soft economic growth data out of China. Investors expect crude oil supplies to rise for the week, but remain concerned over the ongoing geopolitical tensions in Ukraine, with the West poised to impose tougher sanctions on Russia that could disrupt supplies. Crude for May delivery ended down $0.41 or 0.4% to close at $99.19 a barrel on the New York Mercantile Exchange. A pair of consumer sentiment readings for Germany and Italy will be released today. Later, the US publishes numbers on new orders for durable goods, which will test the widely held view that the weak growth in this year's first quarter will receive in the months to come. US durable goods, 12:30 GMT. The winter may have slowed the economy, but the all-important consumer is still optimistic that growth will pick up. The consensus forecast calls for a 1.0% gain in orders last month versus January in the headline comparison. If so, that would mark the first monthly rise since last November. Even so, one number doesn't mean much in the grand scheme of the US economy, but a positive report today for this cyclically sensitive indicator would boost the case for thinking that the macro trend will improve. It was the latest market news provided by ICO FX. Goodbye.